Hello traders, how's it going? This is a continuation of the last video I did on how to determine bias. I got a request to make another video or a backtesting session focusing on determining bias alone, which is why I decided to expand more on the topic. As I did mention in the previous video, whether you are a swing trader, a day trader, or even a scalper, you always want to place your focus on determining the direction of the higher time frame, right? You want to know either the higher time frame is going to be a bullish candle or it's going to be a bearish candle. And you always want to align yourself with the higher time frame narrative, because if you do not have a solid higher time frame bias or higher time frame narrative, you'll not be able to align yourself with the lower time frame or the flow or market structure, which will result to taking random trades will lead to inconsistency or over trading, and you do not want that. We know that we always want to trade expansion, and the market cannot expand without a reversal, and the market cannot reverse without a swing point. So with this in mind, that means we need to understand how swing points form in order to take advantage to anticipate expansions, right? So we have two types of swing points. We have the C2 closure and we have the C3 closure. We have the C2 close. The C2 close, this is when candle 1 formed, maybe it reached into a key level or it doesn't reach a key level, then candle 2 will open trade into the key level but displays back within the range of candle 1. So candle 2 failed to display below the low of candle 1, closing back within its range. So once you get candle 1 into a key level, then candle 2 failed to display below the low of candle 1, you can anticipate candle 3 to expand higher through the high of candle 2 and potentially reaching the high of candle 1. And this is exactly what you will get. You'll have the candle 3 being an expansion candle. You can anticipate expansion once you get a C1 and a C2 closure within its range. Then you can anticipate candle 3 to be expansion. And we have our second swing, which is the C3 close, sorry. This C3 close is when candle 1 trades, then candle 2 display below the low of candle 1, but candle 3 would display above the opening price of candle 2. So this in itself is a change in state of delivery. Once this happens, you can anticipate candle 4 to trade higher through the high of candle 3, potentially reaching the high of candle 1. So once this happens, you can anticipate the next day to be a bullish day, right? Once this happens, in a C2 closure, once candle 2 close back within the range of candle 1, then you can anticipate the next day, which will be candle 3, to be a bullish day, because it will potentially trade through the high of candle 2 or even reaching the high of candle 1. And that's exactly what we get here. Let's say you are a day trader and you do not have enough capital to cover the wide stop loss that will be required to take this trade on the daily time frame. You will not want to execute on the daily time frame, right? Which means you will need to drop down on the lower time frame. It can be the 4-hour time frame. Let's say you want to drop down on the 4 or 1-hour time frame. How can you align this higher time frame expansion? You already know the next candle will be expansion candle. Now you will need to align that expansion candle, which is the higher time frame expansion candle, with the lower time frame expansion candle. How can you align yourself with expansion on the lower time frame? You need to look within the candle 3, because here we have what? Our second swing formation, right? Which is candle 3 close. We have candle 1, candle 2, candle 3. So if we get candle 1, candle 2, and candle 3, what will candle 4 do? Candle 4 will be an expansion candle, and this is what we get here. Now, how can you trade this candle 4 on the lower time frame? You need to look within candle 3 on the lower time frame. It can be an hourly time frame or a 4-hour time frame. You need to look within candle 3 for what? For a key level that candle 4 will open trade into to put its low in order to expand higher, because every candle, every day we have open, low, high, close, or we have an open, high, low, close. So the market will open, put its low, then before trading higher. Now within this candle 3, this is what you can get. You can either get a fair value gap or a swing point. In this example, we have a fair value gap. You can see that this candle 4 opens here, trade into candle 3 key level, which is a fair value gap, then form what? Form a C2 close, right? We have a C2 close, which is a developing swing point. We know that Once we get a C2 close, which is candle 1, then candle 2 close but within its range, what will be the next candle? What will candle 3 do? Candle 3 will be an expansion candle. So you see, you are aligning yourself with the higher time frame expansion candle on the lower time frame, also aligning, anticipating candle 3 to be an expansion candle. Now you are on maybe the hourly time frame. You can drop down on the 5-minute and look within C2 for what? A reversal signature to trade the continuation, which will be the candle 3 to expand higher. Now you need to confirm on the lower time frame, which is the hourly time frame. You need to confirm this developing swing point with an XMT. An XMT is just a confluence that supports your idea. You already have an established higher time frame narrative, which is you are trading candle 4. You already have a framework on the higher time frame. Now you need to support that framework with an XMT on the lower time frame in order to increase the probability of this trade going in your favor, because every trade is not guaranteed. You need confluence to support your idea, your framework, right? So we need an SMT on the lower time frame with this key level and get a developing swing point or a swing point at the key level with an SMT in order to anticipate expansion, which will align with the higher time frame expansion. Now let's take a look on the chart, go through some examples so you can better understand it. Here we are. For those of you who know, we created this session mainly for this YouTube, and we have been backtesting. We have already 3 parts or 3 sessions with the videos out on this channel. You can go through them to watch, and I'm going to use the same session for this example. So it's just going to be a continuation. I'm not going to undo anything that we have done so far. So we are right now. Let me take a look at the weekly time frame. What did we do? So what am I going to do here? I'm going to be anticipating the direction of the weekly candle. I'm going to be anticipating the direction of the daily candle, and I'm going to be anticipating the direction of the 4-hour or even the hourly or the 30-minute candle. That is what I'm going to be doing here. So I need to look at where we are on the chart. Which key level has price reached, and do we have any SMT to confirm in order to trade away or not? So you can see that we engage. For those of you who have been following, you know when we engage with this key level, and you know we have an SMT here. So this is a swing low. We have an SMT with this swing low. Why is there an SMT? I don't know if there is anyone who doesn't understand who doesn't know what an SMT is. An SMT is just a divergence between 2 or 3 correlated assets, where one asset trades into a key level, then the other assets reverse without trading into that level. For example, we have here this swing point. You can see that Euro USD has traded into this swing, this relevant swing, but GBP USD hasn't traded into that level. So this is an SMT. There's a divergence between these 2 correlated assets. So that is an SMT there. And DXY, yes, DXY has already traded into that level. So we have an SMT here. Just so you know, DXY is negatively correlated with Euro USD and Euro USD and GBP USD. That is why this low here is instead this high here. So what can you notice on the weekly time frame? You can see that we are currently forming a C2 closure. Let's just say this candle this week closed like this from this key level. What will you be anticipating the next week to do? Which will be candle 1, candle 2, then candle 3. You'll be anticipating the next week to do what? To expand higher. But I'm not sure that this week has closed yet. So I need to drop down on the daily time frame to look at where we are. We are on Wednesday. So we still have this day. This day hasn't closed yet. This is Wednesday. What time is it? Still the London. We are still in London on Wednesday. So we still have time within the day. We are going to drop in within this day. to look for key levels to trade away from this C3. Let me show you something. Need to transfer the on the lower time frame. Transfer this to the lower time frame. Okay. Looking at this, let me open this Euro USD to show you. After we engage with this swing, you can see we have a swing point here, right? We have a swing point here. Ignoring this higher time frame swing point, it is also there valid. It is applicable on the weekly time frame. But if you drop down on the daily time frame, what do you see? We also have a short-term low here. So we engage with that short-term low, which also confirmed with the weekly swing low. What did we form there? We formed a candle 1, candle 2, then candle 3. You can see that we already have a swing point formed here. So we already have candle 1 printed out, candle 2 printed out, then candle 3 already expanded. But did it expand into any key level? No, we still have this fair value gap here open. This fair value gap here, you can see we have a fair value gap here. So we have not traded into any key level. I can be confident now to anticipate that this candle 4, which is Wednesday, will trade into this fair value gap across all assets. You know, we are trading a triad. We are trading Euro USD, GBP USD, and DXY. Why are we trading this triad? Because we need to confirm our higher time frame narrative or our framework with SMT, and we need a triad or two pair in order to get an SMT, right? To measure our SMT. And we need this also for strength switching, which we'll go into that. Maybe not here, I don't know. We'll see. So this is the daily time frame. The weekly time frame, we are getting what? A developing reversal candle. This week might close bullish and it might as well close bearish. We don't know yet how this week is going to close. Just we know that if this week closes bullish, then we are going to anticipate the next week to be a bullish week as well, right? But currently this week we don't know. But if we look on the daily time frame, we do know where this day is going to trade to. We know that this day will likely trade into this fair value gap. Why? Because we have engaged with a short-term low, swing low. Then we formed what? We formed candle 1, candle 2, and candle 3. We have formed a complete swing point away from this level. So now we can expand away from it, right? So now I'm trading the C4 in this swing formation, right? So I need to drop down. I cannot go in that I know this day, Wednesday, be it Wednesday, is going to trade into this level. I cannot just go and take a trade here to put my stop here. No, that would be crazy, right? I'll certainly not even get up to 1 hour 1:1 ratio. No, I will not get it. So I will need now to drop on the lower time frame. I'm going to drop on the 4-hour time frame. First, let me mark this candle, this C3. Yes, the midpoint. I want to see this day do whatever it is doing within the upper half of this candle 3. Oh my goodness, what is this? I want to see this day at its as open. It should trade into a key level within the upper half of this candle 3 before reaching to this fair value gap, right? So I'm going down on the 4-hour time frame to look within that candle 3 for key level. Do we have any key level? Yes, we do. We have a fair value gap here. We have a fair value gap here. Have we traded into that fair value gap yet? Yes, this candle has traded into that fair value gap. And you can see that we are currently forming what? A C2. But it hasn't closed yet. We still have like 1 hour, then this candle to trade, right? But what can you notice about this candle that is trading? It supports expansion because it has what? A small wick. The wick is kind of made fair enough, manageable, but I'm not going to trade it. I'm not going to try to trade this candle. Or if I want to trade this candle, I know that, okay, I'm getting already a developing C2 from this 4-hour key level. You can see that I'm getting a developing C2, which I can at some point anticipate that this C2, this current 2 a.m. London candle is going to close bullish within the range of candle 1. I can drop down within this candle. Let me show you something. Let me see what we have here. I can drop down within this candle, this 1 a.m. candle on the 1-hour time frame to look for a key level. Do we have any key level within it? No, we don't have it. Therefore, I'm going to wait for it to close. So we have it. And remember, our target is this daily fair value gap. That is our draw on liquidity for this day. We have this. Okay, so now we have what? We have a C1, C2. C2 even displayed above the high of candle 1. So what can we anticipate candle 3 to do? To just trade into our draw on liquidity, right? So we know that we are aligning ourselves with what? With candle 4, expansion candle 4 on the daily time frame, with the lower time frame candle 3 expansion candle. So we are aligning ourselves with expansion candle from the higher time frame down to the lower time frame. Right now, I want to trade candle 3 on this 4-hour time frame, but I don't want to go in and take my trade from here to put my stop loss below this low and my target here. I still don't get a good ratio, right? I don't have even a 1:1 ratio. That means I can still do what? I can still drop down within this candle 2, right? I can still look within this candle 2. I can still look within this candle 2 on the hourly time frame or 30-minute time frame. Yes, it is much better if I had a key level on the hourly time frame, I'll stay on the hourly time frame. But now that I don't have a key level within that candle 2, I'm going to drop down on the 30-minute time frame. Do I have a key level on the 30-minute time frame within that candle 2? I think I should change this color to something. What should I do? Yes, maybe this. Just manage it. I don't know if you are comfortable with this color, but I need it for this. So this is the candle 3 on the 4-hour time frame, right? Do we have a key level there? Yes, we do have this fair value gap. We have this fair value gap. And there is one very important thing you need to consider on this 4-hour time frame, which is the lower time frame within the candle 3 on the daily time frame, which is a higher time frame. We're anticipating the daily candle 2 to trade into this key level. Once we drop under 4-hour time frame, now we start seeking what? Confirmation with SMT. So we need to check our correlated pair if there is any SMT within this level, with this key level. Let me see. Do we have any SMT? Is there any SMT? There is no SMT here on the 4-hour time frame with this key level. That means we are going to demand an SMT on the 30-minute time frame. It will be compulsory to get an SMT on the 30-minute time frame before we can trade this. We can take this trade. And another thing, since you already have what? A developing swing point, which is a candle 2 closure already on the 4-hour time frame. If you want to trade away from this 4-hour swing point, you can just drop down on the 15-minute to look for reversal signatures to trade away from. Have you gotten any reversal signature yet? Yes, you've gotten it. we have expansion into the key level, then expansion away, and even we have gotten a retracement back into this fair value gap or other block, forming what? A proportion block. Now you can wait for price to close above this series of down close candle, then you take a trade. But the only thing I don't like about it is if you take a trade from here, you still don't have a good risk to reward ratio, right? You will not even get a 1:2, a 2-hour trade, right? But you have your 1:1. At least it's much better here. But you need to go above the consequent encroachment of that daily fair value gap before you can get your 1:1. So that is not something I like to take. I like to take trades that give me a minimum of 2 hours. So we'll stay on the 30-minute to look for what? Within this C2 on the 4-hour time frame, we need to look for within it on the 30-minute time frame for a key level. Wait for price to open trade into that key level, then we can anticipate another phase of expansion into that key level, into this draw on liquidity, which is our daily fair value gap, right? And at this point now, we need to add the element of time, which is trading with the key zone. Let's see what will happen. We know that the Forex key zone starts at what time? 7 a.m., right? So let's see what will happen. And we have two key levels within this 4-hour candle. We have the swing point here. We have this swing point, and we have this fair value gap. They are all key levels. So I'm waiting for price to either trade into this fair value gap, form an SMT within it, or price can trade to this swing point, form an SMT for me to trade higher into this draw on liquidity. So we trade into that fair value gap. Now, at what time? 5 a.m. Still not a good time for me, but let's just check if we have any fair value gap within it. Yes, we have a fair value gap. There is a fair value gap within it, but it's still not a good time for me to trade. I want to take trade from 7 a.m., which is the Q zone, right? I want to take trade from 7 a.m. That is when the market is volatile. And since we did not get an SMT on the 4-hour, I want to be very careful with taking this trade here because we didn't get a confluence, additional confluence on the 4-hour time frame. So on this lower time frame, which is a 30-minute time frame, I'm not going to consider any swing point unless it has an SMT or it formed within the time window that I know price is going to deliver with much aggression. So I'm going to let this candle 3 close. If this swing point is going to hold, then candle 3 should close above candle 2. All right. So we get a developing swing point here. Now, what can you do? You can risk to take this trade if you wish, but now you will need to adjust your target here, because since you are not taking the trade within the time window that you know the market will be volatile or will be much aggressive, it can do whatever it wants and drop back lower, taking you out before trading into your daily draw on liquidity. Like I did said in those slides, when you are dropping from higher time frame narrative or higher time frame framework to the lower time frame, looking for what these signatures to form, you need to also be adjusting your target. Now that you are anticipating what a C3 to expand on the 30-minute time frame, you can no longer be targeting the daily draw on liquidity with 100% accuracy unless it is within the time window that you know that the market is highly volatile, that it will not do anything else unless it delivers to where the daily candle will need to reach before it closes, right? So here you can maybe take this trade, but targeting what? This candle 1's high, because you have candle 1, then candle 2 trade into the key level, from closing back within its range, then you can anticipate what? Candle 3 to expand to its high. But now you need to confirm that with what? SMT. It's very important. Do we have the SMT? Yes, we have that SMT. You can see here, this is the SMT, right? You can see this is the SMT. this candle trade into this fair value gap or takes the low of this 430 candle, but on this asset we fail to take the low of the 430 candle, so that is an SMT. And on this asset we took the 430 high, so we have an SMT there. So let's see if candle 3 is going to deliver today's high. So we can see candle 3 expanded. It took the high of candle 2, but it failed to reach into the high of candle 1. So let's see what happened. I'm very much interested from this time window. And for those of you who have been following my backtesting session, you know exactly why I'm waiting for this. And you have been witnessing how price become volatile once we get trades within that from 7 till 9 or from 7 till 12. Because 9 also is a good time. That's within the driver, right? So now we are opening at 7. You can see that this SMT or this swing point was violated. It has been violated. We can no longer consider it now because it has failed to deliver price into our draw on liquidity. Now we need to seek another swing to form for us to trade into that level. And do we have any key level? What is the key level left? We have this swing point. We have this swing and we have also this swing point here, right? Look at the other pairs. Yes, we have traded into that swing point, but there is no SMT there. So let's see. Okay, now we have taken this level, this key level here. And what can you notice? There is an SMT there. You can see that this asset, which is Euro USD, took this low, but this asset, which is Euro USD, took this low, but this asset, which is GBP USD, failed to trade into that low. So we have what? An SMT here. And a C2 closure, right? Also within our time, within the key zone. So we have added an SMT and also the element of time supporting what? Expansion towards what? The same draw on liquidity that we had on the higher time frame. So everything now has been aligned. What is left for price to do is just to expand. And remember, we are still trading within the 4-hour swing. This is still candle 3. And we are anticipating this candle 3 on the 4-hour time frame to expand higher, right? And we are anticipating this candle 4 on the daily time frame to expand into this fair value gap. So we have candle 4 on the daily time frame, and we have candle 3 because we have candle 1, candle 2, then candle 3 supporting the same idea to trade into this fair value gap. And now on the hourly time frame, we have what? Candle 3 supporting the same idea to trade into this daily fair value gap, also being confirmed by an SMT within the key zone. So what is left for price to do now? I just know it is going to expand. Nothing is left. I don't want to see price do anything else except expand to this high, to this into this daily fair value gap. Or if it doesn't expand to that daily fair value gap, then this is no longer going to be a bullish day. It might only be a consolidation that will bullshit around and never get there. Maybe perhaps we'll get there, but on Thursday. But at this point in time, I want to see this candle expand. Then the following candle expands into this daily fair value gap. So let's see what happened. Now you have stripped it down to the hourly time frame, right? You can be very much now comfortable to drop on the 5 minutes where you can have perhaps, or even the 3 minutes where you can have a fair risk to reward ratio, right? Because on the 3 minutes now, since you are trading away from a 1 hour swing or a 30-minute swing, you can drop down to the 3 minute time frame to execute your trade, right? And on the 3 minute time frame, what do you have? You want to trade what? The stronger asset. You can see that this asset failed to take this low, so it is now the stronger asset. You want to take what? You want to look for a reversal signature on the 3-minute time frame, and you got it already. You can see that we have the reversal already on the 3-minute time frame, which is expansion met with expansion. So now you can be confident to take your trade here, right? But I'm not going to take a trade because this video is not to take trades, but rather just to anticipate. So I can be confident to take my trade from here, targeting this high, or even trading into the fair value gap, the daily fair value gap. I don't know where it is on this pair. Let me see. The daily fair value gap is right here. It is very far on this pair. I don't think this day will trade into it, but I'm very confident that on this Euro USD, we are going to trade into that fair value gap. So if I'm taking the trade on this GBP USD, then I will exit the trade once Euro USD trade into this fair value gap. So you get it? Or to keep it more clean and fair, since we already have a change in state of delivery on the 30 minutes, on the 3 minutes on GBP USD, I can be confident to take the trade on this Euro USD, placing my stop on this low, right? Because we already have a change in state of delivery here, and I want to trade but Euro USD because I know it is going to trade into this daily fair value gap. So let's see what will happen. Okay, we delivered. So price delivered into the daily fair value gap and even traded through it. So if you want to trade this, taking all of that, you have like a 7 arrow if you could hold, right? So I'm sure you understand how we have moved from one time frame, navigate from the daily time frame down to the 4-hour time frame, applying the same logic, right? On the daily time frame, we are trading within candle 4. We are trading the candle 4, and we look within candle 3 for a key level that candle 4 open trade into to expand away. On the 4-hour, we got that key level, which is a fair value gap. We had candle 4 open trade into it and form a C2. Now we look within that C2 on the hourly time frame for a key level, which we got a swing point, much better on the 30-minute time frame. A swing point, we got a developing swing point, or we got a C2 closure away from that relevant swing within our key zone, which is the highly volatile time that we want to be engaging in price. And once we got that confirmed by an SMT, we drop down on the 3-minute time frame, we execute, and the trades worked out. So that is it. Let's see if we can anticipate what the next day is going to do. Let this day close, go to London. So we have the day trade into that fair value gap and close back within the range of candle 1. Now this candle has become candle 1 because what we have engaged with the key level and closes back within its range, right? So this right now is a C2. You get it? So if we get a C2 closure, what do we expect C3 to do? It should trade back within the nearest key level, right? It should trade back within the nearest key level. And this is what? This is Wednesday. And how is the week forming? We have Monday trade into this short-term low, Tuesday expand, Wednesday expand into this fair value gap and close it back as a reversal candle. So what can Thursday do? Thursday can trade lower, or it disrespect this swing point and trade higher. So we have two things. It's either this week close as a reversal candle, or it's either it close as a consolidation or it close as a reversal candle. There are two ways. Even if it close back to its at its opening price, it is still going to be a reversal candle because it is reacting from a key level. Though we have this, let me see. I think the week has expanded pretty much on both sides, and I can be very confident to say Thursday might just trade into this fair value gap, then reverse back. But whatever the case, I am going to anticipate Thursday, which is this C3, to trade at least into this fair value gap. So with that in mind, I'm going to drop down on the 4-hour time frame and look within this C2, the same thing that we did, and look within this C2 for a key level to support this idea. So do we have any key level within this C2? Let's see. Trying to clean it so it doesn't confuse anyone. We have what? We have this other block here. And oh, we have this swing. There is a swing point here, right? We have candle 1, candle 2, candle 3. That's a swing point. So I want to see this candle trade into that swing point like this, form an SMT in order to trade lower. That is what I would like to see. So we are currently in London. So if London can trade into that level before trading lower, it will be better. Or if London doesn't trade into that level, then it can just expand lower. Why? Because we've had 1700 candle open where it has opened just at on this other block here, and it closed as reversal candle. Then the 2100 candle expand, which is candle C3, is either the London candle expands as C4 into this fair value gap, or it trades back into this high, which is a swing point, manipulated. Then we can get New York, which is 5 a.m., expand lower, giving room for the 9 a.m. candle to also expand lower. So let's see how this day develops. So I'm going to drop down on the lower time frame to look within this 2100 candle to see if there is any key level that this C4 can trade away from. So dropping down the 1 hour time frame. But before we do that, we need to confirm with our correlated pair, right? We need to check if there is any SMT there. Let me take this away. You can see that we failed to close below this series of off-close candles on GBP USD. We CSD this candle, but on this pair, we did not CSD. There is no change on state of delivery here with GBP USD, and also there is no change in state of delivery with DXY. And we are trading a C4 on GBP USD, and on the Euro USD C4, also on DXY C4. So let's see how this forms. Is there any key level to trade away from? The only key level I'm seeing here is this swing. Let's see if we'll open, trade into that swing, form another swing point in order to trade away lower. Now we are getting a decoupled market. And yes, we did trade on this asset into this swing here. We took the 1700 high. So I'm going to let the candle close. So the London session has closed now, or the 4-hour candle has closed, which is the 1 a.m. The London candle has closed, and we can see that it is a C2 closure. So it has closed as a C2, but there is something also you should know. We have already traded into that daily fair value gap on GBP USD. It is right here. Give me a minute. Oh goodness. This candle low, right? It is the low of the previous day, which formed the fair value gap. No, not the low. Let me see. We haven't really traded there. Okay, we had an SMT. Yeah, there was an SMT. So this is the low of the previous day. Yes, that is a low. So we haven't traded into that. So we're still good. And now we've gotten what? A C2 closure away from this key level, which is a swing point, right? So we've gotten candle 1, then candle 2, which trade into the key level and closes back within the range of candle 1. So we can anticipate candle 3 now to trade lower, right? And we also can confirm this with an SMT. You can see that Euro USD traded into this high while GBP USD failed to trade into that high. So we have an SMT here. You can see that, right? And this is our drawn liquidity, which is the daily fair value gap. So we already have confluence supporting this idea for price to trade here. So we are trading the C2, C1, C2, we are trading the C3 on the daily time frame. And now we drop down on the 4-hour time frame, we are trading the C3. So we are aligning expansion candle. The same thing we did in the previous example, the same thing we are doing right here. So I'm going to drop down the lower time frame, which is the hourly time frame, to look for a key level within this 4-hour time frame. But first, you can also execute from this 4-hour developing swing point because it is still a developing swing point. We still have only the C2. The C3 hasn't formed yet. So you can drop down on the 15-minute if you wish to trade from this 4-hour swing. You can drop down on the 15-minute. You look for a reversal signature. Since we already have our SMT confirmed, so you can look for a reversal signature. We have it already. The reversal has already formed on the lower time frame, which is a 15-minute. And we mitigated this fair value gap and CSD, this up close candle that traded into the fair value gap. So this is a continuation signature. You can just take the trade from here if you don't want to wait for a confirmation, or you don't want to drop down to the lower time frame, which is the hourly time frame, to look for another key level to wait for a swing point within it to trade lower. You can just take the trade here on the 15-minute away from where? From the 4-hour swing. So you are trading the 4-hour candle 3, right? So you can drop down the 15-minute and let's see how this works. Maybe this is where you take a loss, or maybe by now you might have moved your stop loss to break even because you had already what? You might have moved your stop loss already to break even here, rendering this trade a risk-free trade, right? So after you got this deep retracement, a closure below this up close candle, and with CSD, this other block, then you can move your stop loss to break even. So this would be like a risk-free trade at this point after we display lower like this. So let's see if finally we hit that fair value gap. No, we didn't trade into that. We did trade into that fair value gap, but on DXY, we have an SMT with that fair value gap on DXY. You can see that. So we traded into that fair value gap on DXY and failed to trade into the fair value gap on Euro and also GBP USD. So this is an SMT, right? Away from a key level. Remember, our draw on liquidity going into this day was for price to take the low of Wednesday, the low of the previous day. So we've taken the low of the previous day on DXY and we are currently reversing from it. You want to stick with a single bias on a day. Once price trade into this key level and you already took a trade, which result would close you at break even because you must have moved your stop loss to break even here. Close you at break even. You might end for the day because price has already traded to your draw on liquidity, right? You might even I did not notice when price traded into this fair value gap. If I taken the trade and I see the stronger asset trade into my draw on liquidity while I'm maybe enter the trade on the weaker asset, then once that stronger asset trade into that draw on liquidity, I'll close the trade on the weaker asset where I'm currently active. You understand, right? So I won't have wait for price to return to take me out at break even. I would have closed the trade the minute this asset traded into that fair value gap. So since we learned everything, I think it would be best for me to end the video here. I do not want it to become too long as well. And I think this is a smart place to put an end. And I just want you to learn that, to know that sometimes you don't want to be in the market when you don't have really like an outstanding level where you want price to trade to. Like we go into this day with the objective that we want price to trade into the daily fair value gap, and it has already done that. And currently it is presenting like an opportunity that it will trade perhaps to the previous day low. That is not a guarantee. That is not what I came into the day with, right? I was trading, anticipating this candle 3 to trade to the previous day low, which is the fair value gap, and it has already done that. So it is time for me to sit back and watch whatever the market is doing without me in it, right? You don't want to be in every market move. You will take unnecessary losses that are not meant to be there. So please, when everything is not right for you, it is enough reason for you to sidelines and do nothing, right? That's it for today, guys. If you have learned anything here, just give me a like. And if you haven't followed yet, please go ahead and follow. And see you in the next one.